Hello traders, this is Rich Dare from tradesight. Just wanted to check in with you and talk about the most recent AAII sentiment survey results. This is something that comes out weekly that we track at tradesight, and it's not something that's so much a timing tool, but it's really something that gives us the overall flavor for or the appetite for risk in the overall market. And what we've seen over this past reporting period was a very sharp drop in the bulls that went down by almost 10%. And rather than parking themselves, at least partially, in the neutral territory, they went straight to the bear camp. So we had almost 10% of the bulls go right to the bear territory. So we had that bearish result number swell by almost 10%. It's up to 48.8%, which is a very, very big reading and very notable. What I want to do is just take a moment here and take a look at the other comparable periods when we've had this many people in the bear camp. So if just give me a moment here, I'm going to switch this chart and we're going to take a look at the comparable periods. Now in this depiction, you can see how we've had really two comparable periods where we've had this many bulls, or this few bulls and this many bears set up in the sentiment results. Now here we have 2011 down here. We had 46%, 47%, and 48% in this 3-week period. These are all consecutive weeks here, where we had a very, very high reading of bears. And this was an important moment for the market, where the market was actually in the process of finding a bottom. And then we had a comparable period earlier this year, okay, just before the summer rally started. We had 42% and then 46% in a back-to-back 2-week period, where we had a pivot formed where the market ultimately turned higher. So what I want to do now is take a look at those moments with the S&P, so we can see where those periods lie and what the price action was like at those times. All right, now here's a look at the S&P cash index represented in weekly data. And what we have here is I've depicted a couple of points here on the chart, and I just want to walk through what they are exactly. This first point over here under this first green arrow, this was the first time that we got that very high percentage of bears back in 2011. The first reading was towards the end of September. We'd already recorded this dramatic break, and we came down to this retest. And upon this retest in this area, where this arrow is where the trend was perceived to be negative by almost half of the market participants. And as soon as that happened, that's when the selling began to dry up, and the market started to rebound and started this reflex to the upside. Obviously here it did retest again, but held, and ultimately did produce a very, very profitable move to the upside for people who were willing to take the other side of the trade and play on the contrarian side of the market, rather than believing that the majority of the market was correct in their opinion. The second point I want to look at in the chart was this arrow right here, which was the signal that was given in this year, in 2012, and this was mid to late May, just before the market made its bottom. We had already had this break to the downside, this impulse, and it wasn't until this point right here, this is the first time that we had that pop above 40% in bears, that people said, okay, things aren't good, we're going lower, time to sell. Well, they started selling, believing things were going lower. It did make a nominal marginal new low here, but that did ultimately prove to be a buying opportunity before the market pivoted and again made a new high. Now as we look forward to the current state of the market, this is the actual close right now. We just recorded that very, very extreme reading of almost 49% bears after this break to the downside, not that unsimilar to what we saw in May. And now we've got that sentiment that's very, very negative. People are on the bear side, talking about downside targets and whatnot. But the fact of the matter is that most people are already bearish, so we're going to be looking for maybe a second or third bearish reading, and then a return back to the upside here in the market. So more times than not, when you have this preponderance in this negativity that becomes broad-based and is seen in the AAII survey results, once it really filters all the way down into those results, 1, maybe 2, maybe 3 weeks, and then we have to be on guard for a pivot back to the upside. So the overall takeaway here should be that while the market has broken fairly substantially, traders should be readying their long list and looking for things that may present some technical long setups as we pivot back higher and rally into the end of the year. So keep an eye on this. We'll check back in and see how the survey results come out the next couple of weeks, and we'll talk about those again. So thanks for listening. This is Rich Derrick from tradesight.